Hello, everyone. Lots of activities today. Lots of activities today because what we're going to be doing is we're going to be looking at the two stocks that we're following, GCP and ACMR. That's two stocks I've been telling you about, right? So we're going to look at these two stocks, and we're also going to see what's happening in the stock market because right now in the stock market, we've got some action. We got some action tied to uh, what's going on in the Middle East, and also what's going on with the strike. I mean, this is kind of messing things up a little bit for the market. For the market doesn't mean it's happening for our position that we're monitoring, right? So, what's going on in the market right now? Let's take a look very quickly as to our position. Remember, I mentioned GCT to you before, and I mentioned to you as well our friend ACMR, right? So let's see what I got for you here. All right, so let's share the screen with you. Let me show you. This is quite well. First of all, I also want to say that the ADP job report came out, right? So as you could see, the ADP job report came out, and it looks pretty good. Um, it looks pretty good because, as you could see, the number of U.S. business added, the U.S. Business added a higher than expected 143,000 jobs. It was a six straight months in which employment gain totaled less than 200. A chiller labor market has overtaken inflation. The Fed cut rates 2 weeks ago with inflation showing. So um, the drop off in hiring has been especially evident in a reduced power of workers to earn higher wages. Having said that, I should mention to you that you should realize that this number is not so bad. Why am I saying that? Let me show you why. Because it's higher than the expected 143. Okay, so I mean, but my point being, instead of rattling on here, my point being is that we are not really. The question was, do we have a problem with unemployment? So this ADP report seems to indicate that no negative surprises. I mean, it's not the 200,000 we used to get; it's 143. What do you care? Well, because it's important for you to realize that the Fed has lower rates because they are concerned about. They're not concerned about inflation, and they don't think we're going to have a recession. So in that case, we have a bull market. And the market is kind of saying, yeah, 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 yeah. You know what? Show me first. Show me the real story. I'm not so sure about that. So, as I am seeing a decrease in unemployment, I want to make sure I have a slowdown. I just don't have an outright failure to execute, right? So it seems we'll find out more on Friday, because Friday you're gonna actually have the unemployment number. So that number is going to be crucial for you to understand what's happening, right? So that part is doing okay. Now they have this thing in the Middle East, and they have this thing in the ports. So if I share with you what's going on with Spy right now, you're going to see this, right? So what we are seeing right now, I mean, we closed the yesterday here, right, around 56, 78, but now we open down, and this is volatility. But again, we are a little bit below. We're down 0.24%. Why is the market down this morning? Well, frankly, the market is down because there's some concern about um, the economy. Um, there's concern about, I mean, what's going on in the Middle East, and there's obviously some concern about the what's going on in the ports. I mean, at 0.21%, I'm not going to say, this is it, this is the end, right? No, the market is like saying, what's going on? I mean, why can't everything be fine? We don't have that. We have a little bit of weakness, but you know what? You want that. You, depending what type of trading you're doing, but you want that uncertainty. Okay. Now let's see how our friend GCR is doing. Okay. This is GCR. Look at that. Look at that. 4.84%. 4.84% over here. Okay. 4.84%. Right. So again, let's study the chart, because at the end of the day, I'm not concerned about the credit. I said that yesterday and I said it on Friday. I'm concerned about the way it trades. So let's understand how the name trades. Okay? Look, this is from 2024. Stock is going above the trending line, right? And once it goes there, it stays there for a while. It broke it and it went back up again. It broke it for a little bit. It stood close, but then again, that pair was a pair of uncertainty, right? Uncertainty tied to what went on with nvda, what went on with the Magnificent Seven. That basically, you know what, this thing is too wide. It's time to look for a new direction. So the thing didn't go anywhere, even though we had some pretty decent earnings here, pretty decent earning there. It would, but now for some reason there's not significant news. We are now breaking up. So let's go and dive into deeper understanding GCT. Now, the same way we're understanding GCT, we can understand a bunch of other names, right? So this is a 1 minute increment. As you could see, once it tends to break out above, I think this thing here, the way it trades right now in 1 minute increment, and I will show you live. So let's do a little bit of drawing here. Okay, as you could see right here, I'm going to give yourself a box. It's fun. You're going to see. You're going to like it. Trust me. You're going to learn something this morning, right? So this is how this thing trades. So technically, we are heading here, right? And you're going to see why, because of the way it has historically been trading. Look, let me show you again. Okay, we're up there. Now, since September 24th, we have been breaking away from the line. And once we break away from the line, we tend to stay away. Now, when I say the line, I'm talking the 50-day moving average. Okay. Now, see this? This is how you make money. You make money because let me give you a little further out. You make money because you see, okay, it trades above the line, it breaks the line, it sticks to the line. And like I said before, we lose the line, but now we're coming back to the line again. The line I'm talking about, I am talking about the 50-day moving average. What does that have to do with anything? Well, you have to understand that what we're doing here, we are doing pure price analysis, price for the stock, for the movement of the stock itself, right? I am not concerned about, what, events that may correlate to it or not. And another concept I think you need to understand is the concept between correlation and causation, right? Does the fact that the company is not doing well causes the stock to go down? Yeah. The problem is, right, if I look at the news, I mean, the only news that I have is Giga Technology short seller sentiment. I have something about, is it a buy now, 9.7%. There's no news on this stock, right? So this thing, since September, it is moving based on what? Exactly. And we'll talk about this for a second. But right now, let me make my case that for the 50-day moving average, we should see some upside gain. We're at 5.73%, by the way. In addition to that, if you're looking at 20, I am not, just want to make sure I'm not trying to sell you anything, right? I'm trying to explain something to you, because then if you understand what I'm doing with this, then you could apply to other stock, right? So look what happened to the 20-day moving average. It's been hugging even closer, right? Literally on top of the 20-day moving average. The only issue that you're having right now is that it's taken off from the 20-day moving average. In the past, it was doing both above the 50-day, hugging the 20, below the 20, the 50-day, but still hugging the 20. Now, there's a different pattern that's happening. Let's go back and see some latest information, right? As you could see, it's going in my box. We are up 6.28% today. Now, yesterday we were up also. We were up 20% on Friday. Now, could there be something going on that we're not aware of? Well, I mean, what do you think is going on? What do you think is going on? I'm not the only one trading. A bunch of people are doing the same thing, right? Maybe they realize that, you know what? This stock used to trade at $40, people. What are we doing down there? And maybe it's time to switch over to the small caps, because there's also that theory that small caps have been forgotten. And what I mean by small caps, look, the P ratio at 10, right? For next year, it's a P ratio of 6.5. This thing is dirt cheap. And yet, I hate to say it again, earnings per share is not doing nothing. It's sales. Okay, earnings per share is really, I don't really believe too much in earnings per share. I tend to believe more in the cash flow. But look at sales. I mean, sales are not lying. I mean, this thing is shooting up. It's doing great. Okay, there's all a bunch of pie. So everything, the wind is behind you on a stock like that. I mean, obviously I'm talking about GCT, but I could be talking about 100 different stocks if you have the right one to be involved with. So this one is doing fantastic, right? So what else is going on here? Well, quite frankly, the market is saying this is a $40 stock. Why not? Right? I will show you. Let me show you very simply what's going on with the SPY. As you could see, hold on, let me show the SPY. Okay. So if we take a look at the SPY, we could see we're up 0.28%. Okay. Now, let me share with you the Russell 2000, right? So we could see exactly what's going on with the Russell 2000. Why? Let me show it to you first, and then I will explain to you. Okay. You see the Russell 2000 here? Right here. The Russell 2000 is down minus 0.55%. What is the S&P doing? Minus 0.3%. Why do you care? No, you care very much, because there's another story in the market that has to do with the rotation trade into small caps, which is basically the Russell 2000. Small caps are stocks that basically are trading at 2 billion a market cap or below. Okay, and as you could see, it's doing a little bit worse than the S&P 500, but frankly, they're on top of each other. So if they're on top of each other on the way down, maybe they're going to be on top of each other on the way up. And maybe we have now what's going on, a rotation trade, where people are tired of spending so much money on the S&P 500, which is a lot, right? The S&P 500's P/E ratio is pretty high. It's pretty high because it's a market, right? You want to know where the market is? Well, let me show you where the market. Look at the P/E ratio for the market as measured by Schiller. We are 36. It's high, okay, because of the P/E ratio for the market as a whole, and that's a lot. Okay. let me show you the S&P P ratio. Right, this is the S&P P ratio. We're at 29 right there. You see that? The S&P is at 29. Where is it compared to where we've been? Well, I mean, it's not 20. It's not, 2010. I mean, 20. This is not 119 when we were in 2008, where we just lost our shirts. It's not, this is the dot-com bubble. But so we're not at the dot-com bubble. We're not 2008, and this is not 2020. But it's pretty high. It is pretty high. So to that end, and when we're looking at something like that, we've got to worry about. I mean, are we overextended? Okay, but like I said, you need a catalyst to bring you down, and I guess the catalyst could be we overextended. We're paying too much for it. Yeah, but it's always a possibility that suddenly everybody wakes up and say we're paying too much. The same way we woke up, what is it, in July, and look at the Magnificent Seven, and we say, we're paying too much for NVIDIA, and then we just dump the whole thing. That's always a possibility. I'm not saying it's impossible, but keep in mind also, the Fed in its back pocket does have a 500 basis points of cuts that they could apply, because they raised in 2022, they raised the rates by 500 basis points. So they could, and they did 50 bips recently, and they in case there is something, they will bring it down. But keep in mind that you don't have a stock market crash just because you have a stock market crash. Something has to be a catalyst, right? Look at what happened in 2000. There we were really, 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 really high in terms of the dot-com bubble. Then we had 2008. 2008 was a crisis, right? People were just ridiculous on the amount of money they were spending for houses, and the whole market collapsed, right? And then we have 2020. I mean, what the hell are you going to do with a virus, right? So now what do we have? What is a catalyst that we have? Things feels a bit too expensive. Now, I will tell you one thing. In terms of catalysts, keep in mind, forget the election, that you do have this situation with the national debt. So don't forget about that. That's always in the back of our mind. Okay, so blah blah blah. We're talking about making money, and we're talking about what's going on. So you know what? Let us take a look. Let us take a look at our position. Right? Remember, I bought about 11 contracts or so. Right? So let me share with you how we're doing. So keep in mind that we're looking at the 22.5 GCT call, right, that we purchased on Monday, and we bought another 2 yesterday, right? So about 11 contracts. So let's take a look at GCT right now. Just give me a second. Let me show you where's GCT right now. Here we go. Okay, so this is GCT, right? So now we're up 7.46%. Remember the box that I put in for you here? Okay. It's the box. The box is going to be here somewhere. We're going to keep moving. So for some reason, we're way above here, way above. This could be a breakthrough. Now remember though, we did have a breakthrough like this, right? And we went from 10, we went all the way to $40 December of last year, right after the earnings. So this stock has a potential for some serious gain. We're talking 400% here. I mean, 300% in a couple of months. Is this a break again here? Are we breaking through? Okay. We shall see. Let's take a look at options for this name. This is what you do. You need to understand how the options are trading. Today, that option around 27 is up 33, is up 87%. These are above. The one that I have is this one, right? So I have the 25. So right now I'm up 22%. Okay. Um, the question is, what do we do? Right. Let me my screen. Let me share the account on. Right. Look. This is real. I'm not joking around. This is I'm really trading for real here, right? This is the expiration date. This is the position. This is a 1-day trade, right? I am up $1,600 total return. Today I'm making 2,500 because when I traded on Monday, it didn't do well, but then Tuesday is doing well and Wednesday is doing great, right? So technically I'm at 48% in 2 days. Okay. 1 week ago, no, this thing is trading at $7, right? So look at the trade for the past week. This thing was at $2. Look at this for the past 1 week. We're now at $4.50. Okay, past month, past 3 months, obviously we're not doing well because we need to recoup. So keep that in mind for 1 second. The stock itself, the stock for a GCT is up 7.67%. Okay. And the option today is up 23%. 723, we are talking 4 times, or 3 to 4 times. That's the leverage that you get with this kind of a stock. Okay. Now, we also mentioned yesterday, I mentioned to you AMCR. Remember AMCR? So let's take a look at AMCR, ACMR, sorry, ACM research, basically, right? So what's going on with this stock? Well, it's up 3.73%. Believe it or not. Correct. It's up 3.73%. Not a bad thing. Not a bad thing. We're doing okay with that stock. We have today's return is 11% all around. It hasn't reacted so much. So let's try to understand ACM. Let's try to understand what's driving the stock. Well, again, this is P ratio 15, a little bit more. Forward P is 10, so this is still cheap, not as cheap as GCT, but it's cheap. So what's going on here? Well, if I look at the same thing as GCT, you could see that for a while, right, it was trading above the 52 moving average, 50-day moving average, and it exploded, and then it broke through, and then exploded and broke through. Now, of course, you will notice that the beta for this stock is 1.54. Yes. Quite volatile, I have to say. This is not 2.6 as the same thing as Tesla, but it is volatile. So what's going on? Well, it seems to be hugging more the 20 days a lot more. See the 20 days? Look at that. Look at that. Look at that. Look at that. Now, of course, we want to make sure we don't have any fundamental issues, which we don't. But look at this. See? And now, for the first time, I took a big loss yesterday because it went down a lot, but now it's been catching up again, right? So look at that. Let's take a look at 1 day, the 1 hour thing, a 1 minute thing. It went down and it's kind of up. This is extremely volatile stock, I have to say. Don't particularly like the way it trades because it's very difficult to evaluate, right? So it's since September, we were below because, like as usual, like the other stock, the other small stock, they tend to go down a lot. They went south and went below the 50-day down moving average. But since September, it's been trading above it, right? And it's been breaking it. So the trend is up on something like that. So I wouldn't be too concerned. Is there any news on this? And no, look at the earnings per share, look at the sales, right? Um, Operating system provides backlog data. Not significant news. So this thing is trading above its 50-day moving average. It's being driven a bunch of things. Now, one thing that I wanted to report to you, which I think is interesting, is there was a discussion with France Strat, which I think we should comment on. Let me share the screen with you. Right. So
musings on the markets. It's managing partner, head of research at Fundstrat Global Advisors, as well as a CNBC contributor.
Now, again, like I always said, he's a contributor, so they want him to say what he thinks is going to happen, but he also has his own portfolio, so you got to be careful here, right? But basically, what was, as you could see, Fundstrat Tom Lee on 6,000, so he's thinking that this thing is going to be positive. Let's see what he has to say, and let's try to understand what the point is he's trying to make, and see how it matches what we're thinking.
People forget, I think, but your outlook and views are always nuanced to some extent, Tom. So last time you were on, after being pretty bullish on small caps through the end of the year, I wouldn't say you didn't change that long-term view, but you did express some near-term caution.
Now, the ADP job report that you're seeing below, basically today, told us that 148 below the 200, but in line with what we were expecting. So there shouldn't be too much of a concern with employment coming Friday, but because ADP is just a survey, it's their own survey, it's not the official survey of the government.
And these people want to know, the people that follow you, the people that watch Squawk, they want to know exactly what to do every minute of every day. So
see, that's the problem that I have, right? You should not be listening to anyone to tell you what to do. And the reason you don't want that is because you don't know really what it is that these people are really thinking. What is it that they have in their portfolio? They may tell you, I like this stock, but then you never know that they maybe hedge against the market as well. So you say, oh, so you like this stock, so I'm going to buy it. And if it's the only stock that you own, maybe it doesn't fit well with the potential decline because they may be willing to take certain risk that you would not be willing to take because you're just concerned and you don't have the back. So you have to, and this is part of the education here. This is the part of the education where I'm kind of educating you and on how to read. I'm not saying don't listen to anyone. You should listen to these people. You should listen to what they have to say. But what I'm saying is you need to understand where they are coming from. That is more important.
Look to them like you had waffled on your long-term view. And you're going to say the same thing today. I think near term, you acknowledge that there could be some bumpiness, choppiness.
So as you can see, S&P should reach 6,000 by year end. Okay, right now we are, nowhere there yet.
But by the end of the year, you think 6,000 on the S&P.
That's right. I think we're still in the midst of a very tricky period because we've got the election in less than 35 days. And now we've got two things that investors don't know how to discount. One is, mounting tensions in the Middle East, and then a port strike that is potentially going to cripple the economy. And so I think that as investors worry about this, if we get a dip and a big...
So basically, we've got the election, we got the Middle East, and now we have the port situation on top of what we had behind. Remember, this whole thing, at the end of the day, even if, and this is why it's important for you to make sure you understand the credit of what you're buying, that you're not concerned about the company having negative news, right? You need to understand that the market trades really on emotion, trades on perspective. This is a This is not a science. This is a quasi science, right? So that means that there are elements that are driving the market that are that are all over the place and are always unpredictable. Okay, which is precisely what is exciting, which is precisely why you can make money if you have the story right and you have your head screwed in correctly as well, to be able to take your gain. Like right now, I'm watching my potential gain here on a GCT, and I'm thinking, I mean, I'm up $2,600. um, what am I waiting for? Right? Let's not get too greedy on something like that. But we'll let it ride a little bit longer based on my recommendation to you. I mean, if you think I should sell, you should let me know what your thoughts are. But going back to him, he's got these three things happening, right? Investor will buy this dip like they did in 2024. Stocks to be strong in year-end. Upside is bigger for small cap stocks, which is exactly what I've been telling you.
Big dip, I think you still want to buy that dip because the setup into year end has a lot of tailwinds.
The worst case scenario for the port.
The setup has a lot of tailwinds, mean that stock are going to get being pushed up. And I don't know if he's saying, if that's how he means it. I will tell you, between you and I, that there is no way the Fed is going to allow the market to crash. Right? If there's a problem with stocks, they will lower the rates a little bit faster. I mean, right now they got to be thinking, what is this thing with the port? Is this port going to impact us? I mean, don't forget, that's a lot of the port is important because a lot of the stuff that we're buying comes from the harbor, right? So if it doesn't happen, then you're not selling your things, and it delays, and the boats can't leave, and then the tankers can't come in. You can't deliver like we did what we had in COVID. So if it lasts more than 2 weeks, we got a problem on our hands.
Situation is something that we've seen, and we shut down an economy already, and that was probably a time to buy. We know that. So we've seen that movie before. Could it be? I can't imagine it could be as bad as the pandemic, but we have shut down an economy before.
Yeah, that's right. So I think it creates headline risk because,
Well, what he's saying is the market is always recovering, and I think we should I should point out to you that let me show you something very interesting. Let me show you why you shouldn't be too concerned with what's going on, because let me show you. Let's get back to the SPY, and let me show you something of great importance. Okay, let's go back in time, right? So let's go back. Right? Let's go back to 2000. Let's say 2000. Let's say in 2000. Okay, look at in 2000. Right, we were around 100. The SPY. The SPY basically tracked the S&P 500. Right, so we were around to 150, and then of course we had the problem with the dot-com bubble, and we crashed all the way to like 80. We lost 50%, right? It took us 50%. Now look how many years, and this is the key part, look how many years it took us to get back there. Okay, it took us, so I had money here, and I lost half of it within a year and a half. It took me 1 year, 2 years, 3 years, 4 years. It took me almost 5 years to get back. And then, of course, after I got back, I lost it all over again, and even worse, right? So it takes me 5 years to go up, right? Now, how many years did it take me to get back? It took me 9, 1, 2, 3. It took me about 4 years. You're going to say, where are you going with this? Hold on. Took me 5 years to go back. Took me 4 years to get back. And then I started making money again until 2020. There in 2020, I lost about, I was at 300. I went down to 230. But, and this is the key part. Look how long it took me to get back. I lost this. I went down a bit last year, right? Look how long it took me to get back. And that is the point, is that don't worry too much about the market losing its tail for a long time. Now, of course, this has a lot of patience, right? Because it basically means that so that we can't lose in the stock market. No, it's very volatile, and that's why I think options is the way to go, and stock as well. So basically, don't worry too much about the war, and I would agree. I mean, war. Unfortunately, a lot of money is being spent in wars, right? The only problem here, you got to be careful of the oil. But overall, lots of money is being spent. All that weapon is going to be replenished. All that money is going to be spent to bring it back to where we were. So it's always, unfortunately, it's a positive thing. And brings up, of course, the issue that at the end of the day, this is a rich people's problem, right? Because the stock market is doing great. Our options are doing great. The housing is doing great. The only issue that we're having is what about the people being impacted by unemployment? None, right? But what about people being impacted with inflation? There's a lot of people being impacted with inflation. That's a fact, right? Um, let's see. Well, what he's mentioning is obviously is people like our friend Warren Buffett has got billions of dollars on the cash. He sold everything in July, and he's still doing quite all right. So not a bad deal to be in. So let's go back to see what's going on with GCT. All right. Let's see what's happening with the chart on GCT. GCT is up 7.6%. Look at that. Let's take a look at right. It went up to that square I was telling you about, and now see, that's the thing. It wants to hug it back up again. You know what we're gonna do here? We're gonna sell this position because I think we did quite well, and there's no reason to get greedy on a position like that, because you see, it went, and again, it has a tendency of wanting to hug that line, and it broke it again. It doesn't feel the comfort. And frankly, when you make what is it? By the past 2 days, total percent return is 43%. You make 43% in 3 days. I mean, there's what 100 more of those trading days during the year, maybe 100 times 400. It's 4,000% annualized, right? See what's happening? Look at it. It hit it, and it just wants to go back up again, and it's going to hug back. See, it's going to want to hug the that line right here. Look at it. Look at it. See? So here we're talking something like this. We're talking, look at the target. Now, of course, what does that mean? Why is this happening? Why is it that the movement of the stock is so predictable? It's not predictable. Don't forget, there's lots of people out there. What they do is they try to predict the market purely based on the way it moves. And this is not a stupid thing to do. It is not a stupid thing to do, because at the end of the day, what we are doing is we are essentially looking at patterns. You get up every morning, you go to work, right? It's going to be cold in the winter and hot in the summer. In fact, there has been studies to show that what we want to do is we want to be able to predict the stock market using the same technique used by the weather. Exactly. Now, again, because the stock is quite volatile, okay, don't forget, if we look at what happened yesterday, right? Yesterday we did quite well, right? We started at yesterday we started here, right, 10 a.m. and we started at $23, and we ended up at $25. Okay, so we did 2 great days. But hold on. Monday, right? Monday, look at Monday. Monday I started at 24. I ended up at 22. So that was not a good day. Okay, so you need to realize exactly, what's going on. I mean, you need to make sure that what it is that you are involved into. Okay, so right now we are 7.3% again, 7.4%. Look, right? We want to hug that line again. You see that? We're in that area. This is live trade analysis. Don't forget, subscribe to the channel. Like what you see, because see, look, it's going back up again. It's hugging, and it wants to definitely stay away. It wants to stay away from the 50-day, and it wants to hug the 20-day. It's stay away hug, basically. That's a technique. Look. Okay. Now, why is this happening? Well, I don't know. Why does it get cold during the wintertime? I don't know. We got a bunch of thousands of people trading this thing. Now, my estimation is that this kind of pattern, right, which sounds great. I mean, we are really taking off away from this thing here, right? This is the first time we're that far away. You're going to say, well, not really. What about early in the year when we really went up? Well, when was that? In the beginning of the year? I mean, look at that. Could this be it? But we're not in the same period, because don't forget, right? If you go back further out, well, there was no further out. But we are really. Is this what's going to happen here? I mean, yeah, when I was at $10, but I'm at 20, and the move started when I was around 16. So the way I would look at this, I was at 10 and I went to 40. Here I'm at 16. And I would say this thing goes to 32. It's going to double. I mean, because this period is not the same as this one. This one was different. It was, we were riding the market and everything else. This is a lot more stuff going on. So therefore, I think it's going to slow us down. So what I would do is I would say, listen, I'm going to get out of this position. I mean, I could see it's hugging but then it maybe okay, it's going through it. So that's always a good thing. It's getting closer to it. And it's going to recover that, but it's having difficulty staying above the. I mean, I don't know how much more money do we want to make here. I mean, $32 with 7%. I don't know. This feels to me like it's time to take our profit. I think. Now let's see. Besides this, let's see what else is going on in the market. Let's see. I mean, right now the Russell. Okay, here we go. Okay, look. You see what I was telling you about? Right. Take a look at. Okay, take a look at the Russell. The Russell is positive and the S&P is not. That, my friends, gives me the indication that we have a rotation into small caps. So I wouldn't worry too bad. You see, look at Tesla, for example. I love Tesla, but it's down 5.64%. Okay. Why is it down 5.64%? I mean, Tesla is see as opposed to the other one. See the 52. Look at the 50. I'm going in. I'm breaking it. I'm going above. I'm breaking. I'm going above. I'm all over the place. I'm not even hugging the 20 days. It's a very and of course when you look at the beta for if you look at the beta for Tesla, is 2.29. Extremely volatile. And look at look at the forward P, 76. So here's a case where the P ratio is 356, is 68, but it's going to make less money next year. So now you're paying a lot for Tesla. You got to be very, very, very careful on a stock like that. Okay. Because it's it's extremely volatile. Okay. So I'll be careful. Now, what was I showing you? Yes, I was showing you the SPY. Okay, so let's take a look at SPY. Let's take a look and see what is going on here. So what's going on, as you could see right here, you could see that, let's take a look at some of the news. Okay, let's take a look at home. Okay, this is what I was telling you, right? Again, 10%. So I'm doing better with my small cap stock. So that's definite. Okay. Now, U.S. stock churn while Treasury gains. Tesla sink because, see, that's the thing you have to be careful. One thing you don't want on your company is you're trying to fight and understand the movement, and then you get hit with the stupid news like Tesla sink as third quarter delivery falls short, right? Got to be careful. Stock market today, all prices fall further. Watch out for that. That could be the shaky October. S&P slips for a second day as shaky October start continues on escalating Middle East. But again, like we said, I wouldn't be too worried about it because we made more money on the economy whenever there is a war. Now, ADP employment, as you see here, we were expecting 120, prior was 103, and the actual is 143. So it's better than expected. Employment change. ADP is the company that process all the checks and everything else, so they could see the amount of employment change. It's a natural fit. So I mean, basically, the employment is going up, so we should see unemployment maybe going down and that would be a fantastic thing. I would put a bunch of position for well, today is Wednesday. You have 2 more days of, I don't know. We're gonna have 2 more days of gain. That is a question here. That maybe put some S&P position. Get out of this GCT business, which is doing great, but how long is it gonna go? And get into the SPY. Now, as you could see, the NVDA there not doing so great after all, right? Not doing so great. So this, hopefully this helps you understand and view how to look at stocks. It's important because it can be very helpful to you. Okay, so I think I'm going to unwind my position because I feel that I think it's a little bit overdone, right? We don't want to be greedy. We don't want to be greedy. We want to do our thing and then we want to get out. I mean, how do you make money in the stock market, right? How do you make money in the stock market? You make money in the stock market by picking up trends, understanding the environment that we're in. And what is the environment that we're in today? Well, I mean, it would appear that employment is doing great. It's up, not as high, it's not 200,000, but we'll see the number on Friday. So employment is under control. We know the Fed has indicated that they want to lower the rates. That's always good for stocks. I'll take that. The companies that I'm selecting are in good position. I like that as well. And maybe I want to play around with the SPY, the S&P, because Friday news should be positive. Therefore, we should start finally to see a bump in the S&P, which we haven't seen in a while. We haven't seen a bump in the S&P. I mean, we're maintaining ourselves, but it's not the greatest thing. So between now and the next rate cut, that should help us further. The only thing, of course, is that we have a problem with what? With the war, the Middle East, and potentially with what's going on with the port. So that's a developing story. So we got to be careful here. We might want to decide to protect our book. Now, if you're long, I mean, if you're long and you have a small stock, I mean a small cap, I wouldn't worry too much about it. As long as the small cap is making money, as high growth, P ratio is low, we should be good. But if it's not the case, be careful. Now, if you have a huge portfolio, are you concerned this whole thing is going to collapse? Well, I mean, you could always worry about that. But quite frankly, as I'm showing you before, in 2008, remember in 2000, I showed you that chart. The market dropped, but it took 5 years to get back. In 2008, it took 4 years. In 2020, it went up really quickly. Yeah. The market is staying less and less. Why? Because the people have to make money. This thing is churning. Now, at the end of the day, don't worry so much about volatility if you're doing options, because you want volatility. You want to welcome. But like everything else, you need to understand what's going on, right? That's the most important thing. Understand the story, understand the stock, and understand the company, and understand how the company trades. If you understand these three things, the three horses of the apocalypse, then you're fine. Understand the market, understand the way the stock trade, and understand the company itself. The company, not the stocks, two different things. Hedge fund people don't make money by going through financial statements. The financial statements come out once every quarter, right? Well, they don't make money on the news because, as you could see with GCT, the news has been moving, but there's been no news. The stock has been moving, not the news. So keep that in mind for next time. And I will see you when I have something of interest to say. In the meantime, you could take that to the bank, and don't forget to subscribe and to like what you see and hear.